stocks having a strong start to October, the sector gaining nearly 4%. But will the bounce have staying power? Let's bring in top chip analyst Stacy Rasgon of Bernstein. It's good to see you again. You want to answer the question first and foremost? Will it have staying power or not?
Well, I guess we'll find out in a few weeks when earnings starts.
No, I guess you're right. I mean, what are you inclined to think heading in?
Yeah, you bet. So, you're right. The sector's been pretty strong year to date. It's been strong so far this month. I would say over the last 3 or 4 months, it hasn't quite been as strong. Both the sector and the broader market have sort of sold off from like the July peaks. Now, that being said, I am a little nervous sort of overall, just valuations in the sector, even though they've come in, they're still very high. I think the SOX is close to 24 times earnings. You almost have to go back before the financial crisis to find absolute multiples that are that high. It's something like a 25% premium to the S&P. So overall expectations are fairly elevated. I think going into earnings, it really depends on the end market too. This is kind of an asynchronous cycle. Different end markets are happening at different points. Things that were very strong during COVID that rolled over hard are probably bottoming. PCs, for example, looks like the inventory correction in the channel is mostly done. Overall demand, it's not super, but it looks like it's stabilized. Smartphones have been awful. They still look pretty bad, but at some point, we got to be a lot closer to a bottom than a top there. Traditional data centers pretty weak. The enterprise spending is weak. Cloud spending shifting to GPUs. And on that note, AI is off the charts, as we know. I think the more incremental worries going into this earnings season is more on the industrial and the auto side. These are end markets that were very robust during COVID. And over the last quarter, so we've started to see some cracks, particularly in automotive. That's one in particular I will be watching as we get into the end of the year, if the strength that we've seen in the last couple of years finally does start to fade.
Oh, so I wanted to ask, because you went there, and I have other questions, obviously, but NXPI, because of what you just said about autos, you worried about that name because of the strikes?
Well, because of the strike, we'll see, the strike is sort of on top of everything else. I've been nervous about auto for a while, simply due to the divergence between auto semiconductor shipments and car shipments, and it's been getting bigger and bigger and bigger. To be clear, I've been nervous for almost 2 years. I guess to this point I've been wrong. Auto has been amazingly resilient, but over the last quarter or two, we've started to see cracks from other companies that play in that space. NXP, as far as I know, is still saying things look okay. And I would say for NXP, if auto is okay, that stock looks pretty good. But auto is 60% of their revenue. So that's what makes me a little bit nervous. And it's not really an NXP specific thing. It's just I am nervous in general about auto. The strike, we'll see how long it lasts. That'd be on top of everything else, I think. I
got to be honest with you. I had a little bit of a chuckle. I saw some of the notes that suggested you said you've mellowed on Intel. I'm like, the guy was in a deep slumber on Intel, and he maybe opened one eye. How do you mellow from that state?
So as you know, and I think what you're referring to, we did upgrade it in April.
Yes, that's what I'm referring to.
The title of that note was "We Hate This Call," but fine.
I remember it well.
So that call is on the back of PC a CPU channel normalization. It's actually played out like a champ. The channel has normalized. The company's actually positively pre-announced last quarter, as well as this quarter, actually, that the quarter for Intel should be pretty good. They've already said they're coming in the upper half of guidance. It's mostly that PC channel normalization. So that's all good. My guess is going forward, Intel's revenues can actually, maybe we can see some upside. And certainly this quarter we will. I think there's some question on margins now. The CFO recently was sort of talking down the gross margin trajectory next year a bit. So that's an uncertain kind of thing. I will say for Intel, I think they're doing the right things. They sort of identified some big buckets of cost that they are going after. They've sort of woken up to the fact that they need to be more competitive from a cost standpoint on their manufacturing. If they can't be competitive internally, they'll never be competitive building an external foundry model. So they're doing the right things. They do have a lot of wood to chop, though, from here. So that's enough to kind of keep me sidelined. But at a minimum, at least their business looks like it's bottomed, and we're at least through that cycle.